Okay, good morning everybody. You're very welcome to this morning's webinar on auto enrolment. I've already completed a sound check with people that had logged on earlier. So if you're using your computer, it is possible to increase the volume on your computer, and then a lot of telephone devices as well have a function where you can increase the volume. Do let me know if you're having any problems. My name is Karen Bennett and I am the Marketing Manager here at BrightPay, and I have organised these auto enrolment webinars. These webinars are specifically tailored to accountants, bookkeepers and payroll bureaus who have payroll clients. What we aim to do today with this webinar is to educate you and help you about the auto enrolment process. We will also explore the opportunity that is presenting itself to make a profit by offering automatic enrolment as a chargeable service to your clients. Today we will present two topics. So our first topic is employer duties under auto enrolment and the opportunity for payroll bureaus. And our second topic today is mind the auto enrolment gap. So our first speaker today is Paul Byrne, and Paul is the Managing Director here at BrightPay and is also a chartered accountant, having worked in practice for 20 years. Today, Paul will share with you his ideas on what auto-enrolment will mean for you as a payroll bureau and how to increase revenue from auto-enrolment. Paul believes by offering a complete end-to-end automatic enrolment solution, bureaus can generate income and enhance client relationships. I'm delighted to welcome our second speaker today, who is Chris from AE in a Box. Chris is a director at AE in a Box and of the corporate consultancy CERVELLO Financial Planning. Today, Chris will be talking about the gap facing employers and the professionals who work with them when complying with automatic enrolment. Chris is a financial planner who specialises in helping organisations with both their individual and corporate financial planning needs. Over the last couple of years, he, along with his team, have developed AE in a Box, which is a tool designed to help employers and bureaus meet their obligations under the new automatic enrolment law. Chris focuses on helping employers manage their AE obligations and has helped a wide range of businesses comply successfully, from employers with thousands of employees to SMEs. Today, Chris will examine what you need to consider when developing an automatic enrolment proposition. Now, you're very welcome to type in any questions that you may have throughout the webinar. So on the control panel on the right-hand side, you'll have a little question tab and you'll be able to type in any questions there. We'll have probably a 5 or 10 minute Q&A session at the very end of the webinar, and we'll get through as many questions as we can. Don't worry if we don't get to your specific question, we will get back to you later on and address your specific question. Now today we actually have a free competition, and the competition is for a BrightPay 1516 Bureau license. And we have not one but two to give away today. And it's simple really, the competition is open to everybody who stays for the duration of the webinar. Now don't worry if you miss any of the webinar. We are going to record today's webinar so you can listen to it at a later stage, or if you have any colleagues or anything like that that want to have a look at it, we will email a recording of the webinar to everybody after this morning's webinar. I'll now pass you over to Paul, and Paul is going to present employer duties under automatic enrolment and the opportunity for payroll bureaus. So you're very welcome there, Paul.
Okay, thank you, Karen. Okay, hi everyone. Just a small bit about myself to start off. My background, as Karen said, is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like in the front line. In 1992, I got into payroll software development. A large part of my reasoning for this was to make better software than what I was using at the time. Eventually, I began working in software development full-time, allowing us to focus on a wider range of software packages and expand into the UK. Eventually, we introduced BrightPay and Bright contracts in both the UK and Ireland, However, I can't claim full credit for BrightPay, as it is written by someone younger and better than I, my fellow director Ross Webster. Today, 80,000 employers across the UK and Ireland use our products, a figure that we are improving on every year. So here's the agenda for my slot today, which I hope you will find useful and give you plenty of food for thought. When talking, I will often refer to Auto Enrolment or Automatic Enrolment simply as AE. For those of you who have tuned into any of our previous webinars, apologies if I end up repeating some of the points previously made. Unfortunately, this is unavoidable. So, in short, AE is a government initiative to help more people save for later life through a pension scheme at work. All eligible job holders must be enrolled into a qualifying workplace pension scheme, and both the employee and the employer must pay contributions into this scheme. AE is being rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers would be required to offer workplace pension schemes to eligible workers. By the end of August this year, 5.4 million eligible job holders were automatically enrolled into an AE pension scheme. These employees have been enrolled by 57,907 employers who have since completed their declaration of compliance. You will see from the slide that January 2016 is when the bulk of small and micro employers start to stage. This is the start of the so-called tsunami, and things will definitely heat up from there on. A lot of the companies staging before now will probably have had their own HR people to help them through the enrollment process. The vast majority of those staging from January 2016 will have no in-house expertise and will more than likely turn to you for help. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. The pensions regulator estimates that over the next 2 years, around 1.8 million small and micro employers will need to act as a result of AE duties. It is predicted that 78% of small employers will rely on an accountant, bookkeeper or payroll bureau for AE advice and assistance. The latest employer survey by the pensions regulator highlights how many employers still do not know the exact date they need to start complying with AE laws. 79% of employers due to stage between now and November 2015 have started preparing and are aware of their staging date. However, this awareness drops significantly amongst those due to stage in 2016 and beyond, with just 29% of small employers even aware of their staging date. The vast majority of small and micro employers will not have the knowledge or experience to make informed decisions when it comes to the new AE responsibilities. With the vast quantity of information available, employers are fast becoming confused, bewildered and overwhelmed as to what their responsibilities for AE actually are. Whether you're a payroll professional, bookkeeper, independent financial advisor or accountant, this change in the law means that your clients may ask you about workplace pensions. You must ensure that you are prepared. Payroll bureaus need to decide if they are ready to take on AE business. With many shying away from offering this as an extra service, bureaus will need to determine what kind of information and support they will offer to help their clients comply with these new AE duties. By offering a complete end-to-end solution, bureaus can generate income and enhance client relationships. Okay, with AE comes a number of employer responsibilities. A pension scheme must be set up with a qualifying pension provider, and this should be done in advance of your staging date. This does not require a great deal of time. For example, registering with Nest should only take 30 minutes on average to complete. Next, the workforce must be assessed at your client's staging date, and all eligible job holders must be automatically enrolled into a workplace pension scheme, unless they're using postponement. All employees must receive communications within 6 weeks of the staging date, not just those who have been enrolled. You must notify eligible job holders, non-eligible job holders, and entitled workers, including those who have been postponed of AE and how they have been affected. Apparently, by the way, some employers believe that if they choose to postpone all employees for 3 months at their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive a communication within 6 weeks of the staging date relating to the postponement and explaining when they will be enrolled. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which will in itself be a nightmare. Employers, or you on their behalf, must complete a declaration of compliance within 5 months of the staging date to notify the pensions regulator that they have complied with AE. There are also a number of ongoing employer responsibilities, such as handling opt-outs and opt-ins, making deductions and contributions, monitoring employees each pay period, and sending a contribution file to the pension provider. AE does not require a great amount of time. Some payroll software can reduce the time spent on AE even more by automating employer duties. When an employer reaches a staging date, an hour or two should be sufficient to deal with AE tasks, which includes enrolling all relevant employees, communicating as required to all employees, and setting up and commencing employee deductions and employer contributions. From that point on, it is just a matter of monitoring employees, submitting contribution files to the pension provider, and managing employees who opt in and opt out. Some payroll software monitors the ages and earnings of employees in each subsequent pay period to see if any further enrolments are required and if any new employees should be enrolled. Each of these enrolments should only take minutes to process. So provided that accountants have payroll software that will work in their favour, there is little work involved in the AE process. Staging is the most hands-on task involved, and although it can take an hour or two, it will become easier and faster for accountants and bureaus for every new client that is staged. Before staging, the employer or the bureau acting on their behalf should register with a pension provider. Again, this should not take long. Registering with Nest, for example, should take no more than half an hour. Choosing a pension scheme must also be done by the employer. While many small and micro employers may automatically opt for Nest, this would not be recommended, and some thought should go into scheme choice to ensure that it is the best scheme for the workforce. This decision process should also be documented. There are various services that can help the employer or the bureau acting for the employer with pension choice. I think Chris may touch on this in his part of the webinar. AE does not need to be a major headache for bureaus and their clients, provided they take some time to make sure the right tools are in place to deal with it. AE should become a seamless part of the payroll process, much like RTI. So turning to the often forgotten HMRC basic PAYE tools users, BPT caters for employers with up to 9 employees. To date, basic PAYE tools users have not had access to software functionality that can help them carry out their AE duties. Assessing the workforce and calculating contributions manually could lead to errors, burden and non-compliance. With an estimated 200,000 small and micro employers using basic PAYE tools, the pensions regulator is releasing an AE toolkit to assist these users with AE. As is a government-provided tool, some BPT users may assume that it is the most appropriate solution to use. The tool does have limited AE functionality and is far from automated. The tool will be in the form of a downloadable spreadsheet that will indicate who should be automatically enrolled into a pension scheme and provide an employer and employee contribution value where applicable. Information will need to be input into the AE toolkit. Results will then need to be fed back into basic PAYE tools, and after each pay period, pension details will need to be manually input into the pension scheme's web portal. This will add a huge amount of time to processing payroll and will not be error-free. There are many limitations to the tool. It will not support multiple pay frequencies. It will not support variable contribution levels. It will use a tax-based reference period only. It will assume that the legal minimum entitlement is being used. It will calculate contributions based on banded qualifying earnings only. It will only support up to 15 workers. It will only support entitled workers if they are placed on an AE scheme on the same basis as other employees. It will not have postponement functionality. It will not prepare the periodic enrolment or contribution files for upload to the pension provider. It will not have the ability to support re-enrollment. And it should also be noted the basic PAYE tools does not produce pay slips. And part of the employer obligation under AE is to show the employee the AE deductions and contributions being made each pay period by means of a pay slip. While there is no legal obligation to have software in place, the pensions regulator encourages employers to use an integrated payroll and AE solution that can automate employer duties and simplify the AE process. An integrated system such as BrightPay will streamline AE and allow you to reduce your workload and the risk of non-compliance, saving you both time and money. It is important that payroll and AE software can handle all the necessary employer duties. Software should be able to cater for staging, employee assessment, postponement, all employee communications, ongoing monitoring, opt-ins, opt-outs, and refunds. For large, repetitive, or time-sensitive tasks, the speed of automated AE offers significant cost savings to bureaus. This will be especially relevant when these employers approach the bureaus close to, at, or even after the staging date. Integration with AE pension providers will also be a key consideration to think about when weighing up the various payroll solutions out there. If AE is not already included with your current software provider as standard, you may have to pay additional costs for AE functionality and support. If there are additional charges, it may be worth looking into other packages. So there are 5 important steps to consider with payroll clients. Firstly, engage with your clients. Advisors will find that a large proportion of their clients will contact them very close to or even after their staging date. It is important to engage with small and micro employers that have not yet staged. The first thing to do is to find out your client's staging date in order to start planning accordingly. It is possible to look up the staging date on the pension regulator's website if you have their PAYE employer number. You need to be proactive and notify these clients that you are open for AE business. Communicate your service offering and price it with your clients so they know who will be responsible for each task. Beware that if you decide not to process AE, there will be a risk that you will lose some or all of your payroll clients. Avoid penalties. The impact of AE will affect your client's business now and for the foreseeable future. The pensions regulator continues to enforce fines and penalties for non-compliance. Up to June this year, the pensions regulator has issued 1,295 compliance notices and 332 penalty notices, fixed penalty notices that is. Not allowing enough time to plan could lead to your clients being fined. By planning ahead, it will allow you on behalf of your clients to avoid hefty penalty fines. You do not need to have an in-depth knowledge of AE. However, by understanding employer AE obligations, a bureau can position themselves as an authority figure who is open for AE business. Employers outsource their payroll process to you because you have the know-how and it saves them time and money. Today, with AE, it is not only about cutting costs for employers, but trusting you as a payroll professional to make sure they are fully AE compliant. Furthermore, some employees may not have the competency, time, or know-how to handle AE themselves. Payroll software will play a vital role in ensuring the success of AE. Without the appropriate systems, bureaus will need additional time and resources to cope with AE. Payroll software can provide the necessary functions to automate the employer admin tasks. You will need to know which employees need to be automatically enrolled and which employees have the option to opt in. Payroll software can access employee pay and other information so as to establish who will be eligible, non-eligible, or entitled. The regulator further urges bureaus and employers to check with their payroll provider to ensure that it will correctly identify the duty you have for each employee and to see if the system will support the requirements of AE. AE is presenting bureaus with a unique platform to increase profits. There are a huge number of small and micro employers due to stage between now and 2018. it will be important to capitalise on this window of opportunity. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide added value to existing clients, and increase the possibility of bringing new clients on board. It further provides a competitive edge to you over other bureaus that refuse to provide AE as a service to their clients. Fortunately, modern innovative solutions exist that can automate AE chores. Armed with the employer staging date, bureaus can now simply enter the date to assess each employee's eligibility for AE at the staging date. Good payroll software will further handle all employee communications based on each employee's individual eligibility. Okay, and so this is the part, this is the start of the shameless plug. BrightPay is an integrated payroll and AE software solution which allows you to streamline AE, saving you both time and money. With BrightPay, you can benefit from unlimited employers, unlimited employees, AE functionality, and free phone and email support, all for just £199 plus VAT per annum. You can also benefit from a 60-day free trial, which has no limitations to the software. So I'm going to hand you over to Rachel for a quick demo showing you just how easy AE can be. In this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. And as I said before, registering with Nest should really only take about 30 minutes on average to complete. So over to you, Rachel.
Thanks, Paul. Okay, 1 second now. Okay, so today we're going to have a look at a company set up in BrightPay who are using Nest as their Auto Enrolment pension provider. So as soon as your staging date is known, this must be entered in the Pensions tab and in the designated field provided. This is to make sure that on-screen Auto Enrolment alerts start up at the right time for you. Setting up a pension scheme is also straightforward in BrightPay and can be done in advance of your staging date. Simply click Add New Scheme and choose the relevant pension provider from the listing. So you'll see here BrightPay currently caters for 14 different pension providers, and today I'm going to use Nest. So you must now enter your employer reference, and you will receive this from the pension provider when you're setting up. And in the next tab you enter a group name, so I'll just say monthly here. And here you also have the option to change the contribution rates or the earnings basis, or add additional groups if required. And additional groups may be required if you have employees on a different pay schedule or with different contribution rates. So just click Save here. So as soon as you reach your staging date in the payroll, you'll see on-screen flags and alerts appear, and these will notify you that you have auto-enrollment duties to perform. So we click through here, Amy, to view our options, and we have the option to enroll in a qualifying scheme, postpone assessment, or mark as exempt. So here I'm going to enroll Amy. So simply choose the scheme you wish to enroll her into and click Continue. And BrightPay will automatically prepare the enrolment letter for sending to the eligible job holder, and this letter is ready for printing, exporting to PDF or emailing. So if I go into print preview here, you'll see the letter has details of her contribution rates, her option to opt out, basically just how auto-enrollment affects her. So once Amy has received the letter, simply mark it as done. And you will now see that Amy's flag has disappeared here, so we're finished with our auto-enrollment duties for this employee. So moving on, Benjamin is a non-eligible job holder, so his options are different. We can print or export the right to opt-in letter, we can opt into a qualifying scheme, we can postpone or mark as exempt. And again, Carl is an entitled worker, so again it's slightly different options in that you can print the right to join letter, join a pension scheme, postpone or mark as exempt. So a useful feature in BrightPay is the option to process more than one employee at the same time. So you'll see here when enrolling one employee, you'll be given the option to enroll multiple employees with these settings. So I'll just tick each of these here and click Enroll. And there each of those 3 employees have now been enrolled. And again, BrightPay will automatically prepare in batch the enrolment letters for these employees, and again you can print, export or email to multiple employees at the same time. So we'll just mark these as done here again. Okay, so BrightPay can also handle postponement. So view options, click on postpone this time. Simply choose a deferral date, so the 1st of August. And again, you can do this for multiple employees. So I'll just postpone the rest of those there. Again, BrightPay will prepare the postponement letter. And again, it can be printed, exported PDF or emailed to multiple employees at the same time and marked as done once they have received it. So you'll see now all our flags have disappeared, which means we've finished our auto enrolment duties. And you'll see the contributions are showing up here. And if I finalize the payslips, and you can print, email or export the payslips, but if I go into print preview, you'll see the pension deductions showing up on the employee's payslip. So BrightPay can also prepare the enrolment and contribution files for upload to the pension provider's web portal. So Nest are currently working on an API, which is a direct link from the pension to the software, but at the moment you still need to prepare the enrolment and contribution file. So we'll click on enrolment, simply click next along, payment source, and simply save the file to a location of your choice, ready for upload to the web portal. Again, the contribution file is much the same. You have to enter the payment date, click next along, and again, save the file to a location of your choice. So if an employee decides to opt out, you can simply go to the Employees tab and click on the employee and click the Auto Enrolment feature. You just simply click opt out, enter the opt out reference which you will receive from the pension provider and click yes. So that means Amy has opted out there, and if we go back to the payroll now and on to the next pay period, we'll see Amy has a refund of the pension contributions made to date. So also in BrightPay you can do an analysis. So we can create our own report here and choose which columns we want to include. So I'll just create a Nest report here. I'll choose each of these and click OK and run report. So you'll see here each of the figures are showing up on screen. These reports then you can save, print, export or edit. So I also have another report saved here, which is an auto enrolment report, and if I open this, you'll see you can have two open at the same time, and this report has the different worker categories and all the relevant dates when applicable. So with some of the pension providers, they do the communications for you, so you can turn off the communication reminders. Simply go to the auto enrolment tab again and untick the communications boxes and save changes. So I think that completes the short demo for today, and that was a very quick demo. So if you'd like a more in-depth demo or a demo for the rest of your team, please let us know and we can arrange this for you. So I'm now going to pass you back to Paul again to finish off here.
Okay, thank you very much for that, Rachel. Just when I was looking at the demo there, one of the other features we're actually working on at the moment, which will probably go out in our next upgrade in less than a month's time, is what we call an AE preview, and that actually, say you clients that are staging sometime down the road but would like to know how much auto enrollment is actually going to cost them, and whether or not they actually need to actually register in a pension scheme, because the regulator has sort of announced that if you don't have any eligible job holders, you don't need to register a pension scheme until such time as you do. So this preview that we're adding to BrightPay will allow you to see what their position should be at the staging date and how much auto enrollment will cost them from that date onwards. So it would be great for you guys to be able to advise your clients as to exactly what the impact of auto enrollment is going to be for them. Okay, so just to my bit here, the key takeaways for today are: for functionality, make sure you have the correct software and systems in place to prepare your clients easily for AE. By ensuring that these tasks are automated, bureaus can reduce overheads per client, increase staff efficiency, and increase bureau profits. Be aware that some payroll software packages only partially handle AE. Be aware of hidden costs when researching AE solutions. You need to think about any limitations when it comes to the number of employers and employees and the level of support that is provided, so beware of exorbitant hidden costs. Communicate with clients to let you know, or say to let them know that you are open for AE business. Be proactive and by educating and communicating directly about what is involved for them and what you can do for them. And AE provides the perfect platform for accountants, bookkeepers and payroll bureaus to offer additional services to clients and increase profitability. Make sure you embrace this opportunity to form a new revenue stream for your practice. And also just to let you know that our R&D department is in full swing. BrightPay will have P11D functionality by the end of the 15-16 tax year. CIS will be integrated into BrightPay for the 16-17 tax year. Currently we have the CIS Assistant software, which is a standalone product, and this is free of charge for all BrightPay customers. We are also working on a native Mac version of BrightPay. We have a beta version available at the moment, which is free of charge. The final version is due out shortly. And finally, we are working on cloud functionality to handle employee self-service, automated off-site backups, and client portals for accountants or bureau providers. So we've been kept busy on that front. So before I pass you over to Chris Daems, if you did have any questions in relation to BrightPay and AE, please type them into the chat bar now so we can get through as many questions as we can in the Q&A session. So I'm delighted to pass you over to Chris, who will present Mind the Auto Enrolment Gap.
Let me tell you a little bit about AE in a Box and what it does. Let's go on to the right screen. Okay. Firstly, that's me. We've been running our business now for 6 years. AE in a Box we've been working on for 2.5, and we've been lucky enough to, and we're really grateful for this, to win loads of awards for the work we do. So that's just got a bit of an insight into who we are. So what I want to talk about today is a number of things. I want to talk about our journey in auto enrolment so far and what we've learned and what we've experienced. I want to look at the scope and scale of the market, and Paul's already touched on the potential opportunity, but also the potential challenge we've all got to help our clients comply. I want to see how professionals now fit into the new auto enrolment market, because that's changing. And I want to look at how professionals can manage auto enrolment successfully. We see auto enrolment as being 3 circles: payroll, pensions and regulation. And I want to explore what you can do to make sure your clients comply in each of those areas. I'm going to do specifically at payroll. And I agree with what Paul said. We're in a position where payroll functionality is fundamental to making auto enrolment work in our experience. But then we're going to look at the challenge for accountants and bureaus. In particular, if you've got a really good piece of payroll care, how do you make sure you're in a position where you help employers comply with both the pension and the regulatory functions? And then we're going to quickly explore how AE in a Box might be able to help you with that. And then we're happy to do any questions and answers from there. Okay, so our experience with auto enrolment started in 2012. The largest employer we helped comply was a large fashion retailer, and our relationship with that particular business was we spoke to the finance director, we spoke to the HR manager, and we spoke to payroll. There was about 8 people in a room all trying to solve the auto enrolment challenge for this large employer. We built them a report. We then took action and made sure that the job was done. And then we monitor them, and we continue to monitor them on an ongoing basis to make sure we help them continue to comply. Now, in reality, in a lot of the smaller businesses that we work with, both through AE in a Box and our consultancy clients, the FD, HR and payroll is one person. It's an office manager who manages it all. So the dynamics of how auto enrolment's now managed is changing, because the capacity in a lot of smaller businesses is a lot smaller. Now, when we first got involved in 2012, that was when the larger employers had to comply. And that was all employers that had sort of more than 250 employees. Then we hit the mid-market in 2014 and the start of 2015, and that was everybody between 30 and 249 employees. And now we're in a situation where all the small and micro businesses need to comply. Now, when I look at the markets in terms of auto enrolment, it tells me an interesting story, because even though you've had millions of employees who have complied, you're still in a position where fundamentally there's still relatively a small number of employers who have complied. So let's take a look at those numbers. In 2012 and 2013, coming into 2014, there was 7,000 employers. In the mid-market, the medium-sized businesses, there was 31,000 employers. And I couldn't fit the number of employers who are yet to comply on my graph, and you can see the red line goes all the way down. So we had to zoom down a bit. And the number there is 1.8 million employers. So as you can see, this difference in scope and scale in terms of the upcoming market is huge. You know, it's a massive challenge for all professionals getting involved in this marketplace. So we consider auto enrolment to be in three fundamental areas: payroll, pensions, and regulation. And what I'm going to do is share with you some of the changes we've seen in the marketplace from being involved from effectively day one, and what trend is moving towards now. So let's look at payroll. When we first got involved in the market, payroll systems had limited AE functionality, and very often for the larger employers we worked with, we had to include middleware, which was independent software that did a lot of the things that Paul talked about is now included in BrightPay and other software packages out there. So now, most large payroll software employers, payroll software packages include AE. Now actually, as you probably know, there's hundreds of different pieces of payroll software, and it's really important if you're using payroll software today, and I'm assuming you are, that you check the auto enrolment functionality. Because even though we're moving to a market where a lot more payroll software providers have auto enrolment functionality, there's still a lot, and we're seeing it through in a box, that haven't. So it's important to make sure that you've got that in play. Let's take a look at pensions. So what we saw in the pensions market in the early days of auto enrolment is a lot of the conventional, traditional pension providers were actively involved in that market. You know, there were big schemes out there. All the large conventional pension providers were happy to tender for those schemes and try and get those schemes on board. As the market's shrunk in terms of the size of employers, that's changed. And what we're seeing now is a move to Nest, People's Pension now, but also a couple of the larger providers staying in that market more actively. But that's the exception and not the rule in terms of a lot of those larger providers. And what we're seeing in terms of helping employers comply with regulation is traditionally, for a larger business, what used to happen is I and my team, or a business like mine, used to go in and actively help that employer comply. We used to sit down with the teams of people and guide them through the process. But now that doesn't happen so much, because what we're finding is that more businesses are trying to find scalable solutions, scalable low-cost solutions. So whilst A in a Box helps employers do that, our consultancy business is now smaller because of the fact that there's so many employers who need a low-cost, low-touch, scalable solution to help comply with auto enrolment. So the market has fundamentally changed. That doesn't mean to say we're still not looking after those larger employers. We do. but in terms of the way we had to do things, that had to change to accommodate the fact that there's millions of employers who might not have the willingness and capacity to pay me thousands of pounds to go in and help them. Okay, so when we talk to professionals, what they say to us, and this includes accounting firms, payroll and financial planners, because we've got a lot of financial planner clients who use our in the box, they tell us what they want is the relationship with the employer, okay, without many of the compliance obligations that come with auto enrolment. Now, Paul's right to say that actually complying with auto enrolment, once you've understood all of the rules, doesn't take that much time, but it depends on whether, as a business, you want to really become auto enrolment expert, or whether you need some support in terms of doing that. And what we're finding is that professionals want the business opportunity in terms of helping employers comply, but want to find a way to manage the advantages they've got. So take the administration burden and duties away. So what we're finding increasingly, the way for a lot of professionals to do that is to outsource. You know, you outsource payroll software, and effectively there's solutions out there that now allow you to outsource some of those auto enrolment compliance duties. So how do you do that? Well, there's a number of software packages available. We're not the only ones in this market. There's AE Wizard, there's Financial SatNav, and A in a Box fills a gap in terms of helping employers comply. Let's explore the three circles of auto enrolment: pensions, payroll, and regulation. So payroll for most employers and most payroll bureaus is obviously the one that you focus on. But you shouldn't underestimate the importance of both pensions and regulation. So the obligations you've got under the pension circle is selecting a pension, making sure that it's right for that particular employer. And again, the payroll bureaus we speak to are really trying to avoid pension selection. They want their employers to select the pension themselves. But the important thing in terms of that is making sure that that employer's got a choice and that choice is made easy. I think the most underestimated part of the auto enrolment puzzle is regulation. So you can do a number of really important jobs, tasks within payroll. You know, payroll, a good quality piece of payroll bureau software will issue the communications. It will do a number of tasks that you need to do. However, there are obligations that employers have that sit outside of payroll. One typical example is registering with a regulator. So every employer has to register with the regulator and make sure that they're in a position where they do that within an appropriate timescale. Now, when you look at the feedback from the pensions regulator, many of the fines that have been issued already are simply because that employer didn't register with the regulator. One of the other things that has been quite prominent is the fact that employers have assumed they've registered with the regulator because they've applied for a government gateway. Now, because you need to register for a government gateway and then register with the regulator. So employers are making mistakes in that circle of regulation because the route to comply isn't always as clear as it should be. So we firmly believe that really good quality payroll software plays a fundamental part in terms of helping employers comply. A in a Box doesn't do that. We're not a system that's designed to help with the payroll element. And the reason we decided not to include that within A in a Box's functionality was because there were people like BrightPay who were doing a really good job anyway. So we didn't want to fill a gap that was already being filled by existing payroll software businesses. So let's explain where BrightPay fits and other payroll software bureaus. They fit there. So they fit in the payroll circle of obligation. So they'll complete the communications, they'll process, they'll send information to pension providers, and they'll do a lot of that core payroll functionality. Now, the circles overlap for a reason, because payroll does speak to pension providers and it does fulfill a lot of the communications obligations, but you can see that doesn't mean that all the obligations are filled just by having a payroll piece of software in place. And this is where the challenge is in terms of accountants and bureaus, we believe. 1.8 million employers due to comply over the next couple of years, 2 and a bit years. That's a big challenge for every professional involved in this market. Payroll bureaus need to focus not only on the payroll software, but the systems and processes within their own businesses to fill those two circles. So how do you help employers select a pension, and how do you help employers comply with the regulation that sits outside of payroll, such as registering with the regulator, such as making sure they're aware of their employment law obligations and their contractual obligations. So that sort of thing doesn't naturally sit in payroll, but it does sit in Auto Enrolment under the regulation circle. The fines are huge for small businesses, and I think one of the key takeaways in terms of Paul's presentation is the number of compliance notices already issued. Now, bear in mind that the compliance notices currently are 5 months behind, because employers have got 5 months from their staging date to register with the regulator, and that's where the regulator picks up on a lot of the information it uses to issue fines and compliance notices. So we're yet to see the number of fines in the SME market. I'd expect that to increase, but we're doing what we can at A in a Box, and I know everybody in the payroll bureau market is doing what they can to educate employers in terms of the importance of compliance. But the fines can't be underestimated in terms of that. And also, what a lot of accountants and bureaus are thinking about is the challenge that the regulation puts on their own business. So how do they manage the fact that they might have 30, but they might have 300 employers? They all need to get through the Auto Enrolment process efficiently, and how do they manage the processes within their own business? And the more we speak to both bureaus and accountants, the more we understand that they're not comfortable selecting a pension scheme for their employer clients. Now that's completely understandable, because where does the liability then sit in terms of selecting that pension? Now, there's a solution to that we'll talk about through A in a Box, but I believe that the ones that should select the right pension for their employees is the employer. Auto enrolment is an employer obligation, and therefore selecting the right pension is an important part of that puzzle. So let's talk about some of the challenges that we hear about from both our existing partners and from people we speak to generally. First challenge, accountants and payroll professionals don't want the additional burden of answering in-depth questions about regulation. So if an employer's got an auto enrolment query, okay, and it's to do with payroll, the best people to speak to are the payroll bureaus. That seems like a common sense place to go. But if you've got an employer who's got a question specifically about how the regulation applies to them, many payroll bureaus haven't got the time or resource to answer a bunch of different questions from employers. So within A in a Box, we decided to do something about it. We, from our experience working in the market since 2012, plus the experience of hundreds of employers using the platform, we've built a knowledge base full of FAQs, documents, as well as a Ask the Expert and Ask the Regulator button. Now, both of those buttons allow employers to ask specific questions relating to auto enrolment regulation directly to our expert team, and then we can answer them. Currently that's an email service only. We're thinking about putting it on the phones in the future. It's got 24-hour email turnaround direct to the employer. Okay, so let's explore one of the most pertinent challenges. Many payroll and accountancy professionals are really avoiding trying to get involved in the pension selection process. So what we had to do is think about a way that we could empower employers to help them manage the select a pension. So what we did is we built a streamlined pension selection tool. And what that does is allows employers to find out whether their existing pension scheme is compatible with auto enrolment. Many aren't, and allows them to select a pension from a choice of three. So the choice of three we've got currently are Standard Life, Nest and the People's Pension, and effectively what we do is have an audit trail in place where the employer tells us why they've selected that particular pension, and we record that. The benefit of that is if the pension regulator ever came into that particular employer to check their processes, they've got a clear audit trail of why they've selected that particular pension. The next challenge was that many, we were told by a lot of our users that payroll and accountancy professionals didn't want the additional administrative burden to deal with the regulatory element of auto enrolment. So they were really happy and comfortable with following payroll processes. They were supported by great systems like BrightPay to help them with a lot of those payroll obligations. But in terms of completing a lot of the regulatory tasks, they either wanted to do that, give that responsibility back to the employer, or have a clear framework of what they needed to do. So what we did is built a comprehensive, scalable task management solution which empowers both employers and the professionals that they work with to comply. And you can see there what employers can see on their A in a box page. Every single task they need to complete is broken down step by step in bite-sized chunks to ensure that they complete the tasks. One other function of A in a box is if tasks are overdue from a regulatory perspective, all employers get an email every few days saying what tasks are overdue, so they're constantly aware of what they need to do to comply with auto enrolment. One other important function of A in a box is as regulation changes, we continue to update the platform. So effectively, A in a box is an ongoing compliance tool to ensure that employers can comply. The last change in regulation was April this year, so it's changing all the time, and whilst we're not sure on how it's going to change in the future, if you look at countries where auto enrolment style arrangements have been in play for many years, Australia is probably the most typical example. In Australia, the superannuation scheme changes all the time. So what we pledge to do through A in a box is make sure that employers continue to be updated in terms of regulation. One of the challenges faced in the large employer market is the fact that employees get issued with their standard statutory cons. They get their letter that's issued through BrightPay or whatever payroll software you choose to use. And then they've got loads of questions, loads of additional questions to ask the employer. Now typically, if you're running a chip shop or a hardware store or you're a plumbing business, you're not going to be a pensions expert. So what we did is make sure that within A in a box, every employee gets a login and every employee gets access to a range of videos that helps answer their most pertinent questions. Now the reason we did that is to take the responsibility for the employer to educate their employees, because I think it's important that the message is clear in terms of what employees get, In addition to that, it helps employers because every video is trackable. So if the pension regulator ever came in and said, show us how you're helping your employers comply with Auto Enrolment, you've got an audit trail of every single employer and how they've used and what videos they've seen. And as I said, that's the task management system. It's noted, it updates employers on a regular basis and confirms what they need to do to complete. The other important thing is when employers complete tasks, they need to put the name of the individual who's completed the task within the business to ensure that they've got a clear audit trail. So again, if the regulator ever did want to come in and check, they're in a situation where they know exactly when the task is completed and who by. And there's loads more. We work through partner businesses and partners get an overview of all their employers. There's a certification calculator which helps calculate contributions. And it's designed, A in the Box has not been designed to compete with existing payroll software. We actually think that payroll software like BrightPay is a fundamental part of the puzzle. It's designed to complement that by filling the other two circles. So where does that in the box fit? It fits there. It helps employers with pensions, selection, and helps employers with the ongoing regulatory duties that all employers have. And then payroll system sits there. So what's the cost? Our service is charged per employer. It's £79 plus VAT up front, and it's £29 plus VAT per month. There's no minimum contracts on A in a Box. Some of our employers use it up to their staging date, and that's fine. Some employers use it as an ongoing compliance tool for the longer term, and that's fine too. So employers have got a real choice in terms of how they use it. Interestingly, when we look at our statistics, about 85% of employers currently use it on an ongoing basis, just because they feel that £29 a month is a price they're happy to pay to ensure they comply with ongoing regulation. Now, Paul's right in terms of saying that the proposition needs to be commercial for you, and therefore for users of A in a Box, employer users of A in a Box, their professionals get a rebate of £5.80 per employer per month. So if you've got any further questions on A in a Box, or you'd like to express an interest in finding out more, you can email info@ainabox.co.uk, and you can find out more at www.ainabox.co.uk. I'm also on Twitter, so feel free to follow me there, and you can find me at Chris Daems, and happy to engage, share your thoughts and find out what you think. And that's me done. I'm happy to answer any questions you've got.
Okay, brilliant. Thanks a million, Chris. That presentation really addressed some important issues that the bureaus are finding difficult. Just give me a second. I'm just going to change over the screen.
Yep.
Yep. Okay. Okay. Just before we go to the Q&A session, just to let everybody know that for those HMRC basic PAYE tool users, we now have an offer for 50% off when you switch to BrightPay. So just if you have any clients that are using this tool, they can now avail of that discount. As Rachel mentioned earlier on, if anybody wanted to look at a more in-depth video or demo of BrightPay, you can just click on this link here. We also have a lot of auto enrollment guides that are available, so there's another link there, and there's a lot of upcoming auto enrollment webinars throughout the rest of the year and going into next year that we'll be running. Don't forget to follow us on Twitter and follow Chris on Twitter. We have a free 60-day trial, and just to recap on our prices, our Bureau license is $199 plus VAT per year for unlimited employers and limited employees, free support, and AE functionality is included in that price. And if you do switch from another payroll provider, there is an offer on at the moment where you get a 50% discount. We've recently conducted a customer survey, so here's some stats from BrightPay, which are all very positive. Where BrightPay is accredited by the Institute of Certified Bookkeepers, we're a preferred payroll supplier of Tax Assist, and we're shortlisted for 5 awards for the Payroll World Award. So I'm now going to take some questions. Some of them are directed at Paul, and some of them are directed at Chris, and some of them are quite generic. So if there's anything yourself, Chris, that you want to jump in on some of the generic questions, just feel free. But we just initially take a few from BrightPay, and then I'll call out a few for yourself, Chris. And then if we don't get through all of the questions, we will get back to you. Okay, so this is a question from Liz. If an employer wants to start contributions earlier than their staging date, would you just enter the actual starting date into BrightPay instead of the staging date? So that's for Paul there.
Okay, what the software actually looks for is the staging date. I believe you can actually organise with the pensions regulator to have your staging date brought forward, but the actual date, the only date that's appropriate to put into the BrightPay will be a staging date, because other things flow from that, including the sort of reminders about the declaration of compliance that's required within 5 months of that date. But as far as I look, the easiest answer to that question is actually going to the pensions regulator and maybe bring the staging date forward.
Mm-hmm. Okay. What is the situation with a company with only one director? Do they have to auto-enroll?
No, they are specifically excluded, and there is the pensions regulator has a link on their website, which we can forward on as well after this webinar, where you can basically tell the pensions regulator that you're not effectively an employer for the purpose of auto-enrollment.
Okay. I've one here for you, Chris. Why is now pensions not included in AE in a box?
That's a really good question. Thank you for that. When we looked at who we were going to include, what we wanted to do, and we limited it to a choice of 3 intentionally, because we wanted to make sure that employers who were new to pensions had choice but didn't have choice that was too confusing. So we felt 3 was the right number. In terms of we've got a due diligence document where we went through a selection process on A in a box to get down to a 3, but fundamentally we needed to make sure the 3 had enough range in terms of market choice. So what you've got there is Nest, who are effectively the scheme that was set up to ensure that there was always a home for employers. You've got People's Pension, who are a prominent established master trust, and then you've got Standard Life, who are a more traditional pension provider. And when we did the due diligence, when we compared who we wanted in the master trust slot, so the slot that went to People's Pension, we decided that we'd prefer People's Pension in there as opposed to now. Now, when people use A in a box, they can select their own independent schemes, but in terms of the guidance process through A in a box, that's the 3 we decided on.
Okay, thanks, Chris. Okay, so this is just going back to throughout the webinar. There was a question there from Amanda. I think this one is for Paul. Did you say you don't need to register with a pension scheme if there are no eligible employees?
Yes, this was a bit of an about turn by the pensions regulator. Like initially, everybody had to register a pension scheme, so nearly a year before their staging date. But I think that they recognised that a lot of smaller employers don't necessarily have any eligible employees, and they didn't want the whole system crashing because so many people registering that was kind of unnecessary. So their latest guidance is that you don't have to register with a pension scheme if you feel that there are going to be no eligible job holders as such at the staging date. But I suppose the thing is, when an employee does become eligible after that, it is kind of very straightforward to set up with a pension scheme. Like you can do it the same day practically. So yeah, that's
okay.
So Karen, can I just make an important point on that? Yeah. You're absolutely right in terms of having no eligible employees and not having to put a pension scheme in play immediately, but that doesn't exempt employers from their regulatory obligations. So they still need to follow the process of compliance, even if they don't have to have a pension scheme in place. And one of the important things is making sure you register with the regulator and get those sort of jobs done.
Okay, perfect. Thanks, Chris. Okay, I think this one here is for yourself, Chris, just in regards to your email support system that you have on your website. So how long does it take to respond to email inquiries, as most clients want immediate answers?
We've heard that before. So what we've got is a couple of levels of support. If employers email A in the box direct, there's a 24-hour email turnaround. Currently what we're doing with partners, so professional users of the platform, is we are providing telephone support service. So if there's a situation where you've got an employer who applies direct, that's currently email only. But if professionals come to us and they've got a question, we can provide telephone, webinar support in whatever way you need to. It's just to ensure that we can manage the capacity and make sure our service standards. So if you've got a really urgent query that you need answering, and it comes through a professional partner of A in the box, we're happy to pick the phone up.
Okay, perfect. Okay, another one here. Does BrightPay handle all AE tasks?
Yes. That comprehensive list that's sort of printed on the pension regulator's website as to what you need to ensure all the various tasks your payroll software should be able to do to comply with AE. We do all those, we tick all those boxes.
Mm-hmm. Okay, another one here. Oh yeah, what is an eligible employee?
Okay, probably Chris might correct me on this. I think it's somebody that's 22 years of age or over and is earning over £200 per week.
Yep, not a million miles away there.
Yeah, I'm trying to remember the exact figures.
I always have to look these up.
Yeah. What I'll do when we send the email out, we've got a really nice little table that confirms all three categories. So I'll get that out so everybody's got that as a point of reference. Great.
Thanks, Chris. So yeah, I know we've covered it a million times in webinars before when you're trying to remember the exact figures.
Yeah, I think one of the important aspects on that, and we've seen employers slip up in the past on this, is if you've got employees who are paid differently. So if you've got, for example, a weekly payroll, a monthly payroll, bear in mind the numbers are different because it's aggregated down to how often you pay people.
Okay. So yeah, Chris, how does the partnership work with AE in a box? So you're talking about your partnerships there. So I think there's just people want a quick overview of how that works.
Sure. So partners get access to A in the box for free. Okay, so they can have a look at the system, have a play around, see if it suits them or not. And effectively what partnership does is gives an overview for that particular partner of how all their employees are getting on in terms of their auto obligations. So let me give you an example. We've got a particular partner. He's got 180 employers on A in a box. What he can see on his partner dashboard is how all of those employers are getting on with their tasks they need to complete, together with an overview of what gaps they've got. Now, one of the things a lot of our professional partners say to us is, well, look, Chris, smaller employers expect us to do it and not them.
Yeah.
Now, obviously, that needs to fit into a particular business's commercial model in terms of the time it takes to complete some of those tasks, but that's possible through A in a box. So if an employer wants you to complete a particular task on their behalf, you can do that, and the way you do that is you log in as that particular employer. So partner level access to A in a box gives you an overview of what employers are doing, but also allows you to log in as a particular employer and complete tasks on their behalf. But obviously the commercial model within your own businesses needs to ensure that the time that takes is profitable.
Okay, great. So just again, there is a good few questions coming through here. So if we don't get through, we might just take another couple because we're kind of running out of time. So, okay, what we have here. What size of organizations can BrightPay handle?
Well, there's no limit on the number of employees.
Okay.
That's an interesting one there. Do CIS workers have a requirement for auto enrolment? That's a very interesting question. I think it comes under the heading of personal service workers. And if CIS workers are truly independent, like self-employed, there's no particular requirement for AE, and there's kind of the HMRC dictates in terms of who is self-employed and who's employed are very similar to the pensions regulators guidelines on that.
Yeah.
So the answer, I suppose, most CIS workers wouldn't have any requirement for AE.
Okay.
Sorry, just one here. Sorry, just Carol has asked here, if an employee opts out of the pension scheme, then the employer has to re-offer.
Okay, okay.
Re-enrollment, yeah.
Yeah, sorry, I'll just ask the question there so everybody can see it or hear. I believe if an employee opts out of a pension scheme, then the employer has to re-offer the scheme every 3 years. Does BrightPay have a reminder for this?
Our first employer is only actually staged for the first time just over a year ago, so we kind of have another 2 years to get that into our software, but it will at that stage, all right.
Okay.
Yeah, and A in a box has a reminder service plugged into it already. So A in a box will remind people to do that.
Okay, we'll just take one last one.
Another one there.
Okay, so do you have to opt into a pension scheme if you have no eligible workers, but your non-eligible employees want to opt in?
Yes, you do.
Yes.
Yeah.
Okay, great. Okay, so we're just coming up to nearly 11, Chris. So I think we'll leave it there. And for anybody that we didn't address their questions, we'll get back to them on an individual basis. So thanks very much.
Thanks, Chris.
Thanks a million, Chris. That was really interesting.
Really good. Thank you.
Thanks, Emil.